What is up, everybody? Glad to be here for another Sunday live session. Last week's session was incredibly successful. And so what I say is, regardless of skill level, one of the absolute best ways to spend your Sunday is studying these charts in high-level detail. As many of you know, every single Sunday, assuming I wasn't sick, on vacation, or just had something special to do, I would try to get my butt into the office when I worked at Trillium. The issue with normally is during the week, the markets are open, you have so much on your mind. After a whole trading day, your mind is totally fried. So I found even just the couple hours on the Sunday to be so impactful. Based on the feedback from last week, a lot of you do as well. So what we're going to do for these Sunday sessions is solely just look at the most in-play stocks for the week ahead. Come up with the game plan, study the charts, look at what some of the best ones are, crowdsource a little bit. So for people that are new to the stream, I am only looking at the most in-play stocks. What is an in-play stock? An in-play stock is a stock that is moving either on news or a really special technical pattern. It's got a lot of price discovery, large ranges and everything, and just special technical patterns. So I want to be looking at the stocks that are holding up the best. I want to be looking at the stocks that are making the most moves. I want to look at the stocks that are doing the most abnormal volume. And that's what makes you turn a very efficient market or a very efficient casino into what I call the broken slot machine. For those that don't know me, I'm Lance Breitstein. I was one of the top traders at Trillium. I had multiple back-to-back 8-figure P&L per year years. I am now a market wizard with the new book title and cover announced with my fellow good friends Christian and Lucas, which is really fantastic. And I am now mentoring and sharing my knowledge with the masses. Yes, I still trade. No, I did not give up. No, I am not broke. No, I did not blow up or anything like that. I just try and really only trade the best stuff so I can protect my time and mental freedom and everything else. So this is one of those high ROI activities. And before I get into it, I must do the obligatory disclaimers. So this is not investment advice. This is not trading advice. Do not take my recommendations as a buy or sell or anything. This is simply to show you a glimpse into my thought process. I promise you, as you can even tell week to week, all of my views literally differ dynamically, meaning my views can totally 180 by tomorrow morning when the market opens. My views can change minute to minute, second to second, day to day. So please, this is to just simply educate and help you make the best decisions possible. I am not responsible if you lose money, get injured, or as I said last time, if you get attacked by a flock of pelicans. There were a couple reports of some of the live stream viewers getting attacked by pelicans. I would just say that is correlation and not causation. I had nothing to do with it. I am not responsible. Trading entails risk. Make your own decisions. I'm sorry, but anything forward-looking and anything live, I absolutely need to do these disclaimers. I know many are rolling their eyes, but now we can jump into it, my friends. Okay, so here's what I did. Obviously, I know a lot of people have a lot of tickers. I pulled my Discord from some of the members of the course. I compiled a list. I will still leave time for AMA at the end a little bit. That way we can get a good mix of all the good stuff. So, I'll just start with Bitcoin because I just happen to be on this chart. What happened last week, and this is funny, this just shows how much my views can change day to day. I highlighted that if we break 107,500, that I think, this all of a sudden you got to be open-minded to the fact that we just had a kind of blow off. We then had a lower high, and then if we broke these lows, you would have kind of the high, the lower low, the lower high. Breaking that 107,500 was definitely the line in the sand. And so what did Bitcoin do? Of course, when I talk about that line in the sand and that we've been relatively weak, we then of course proceed to go 5 green bars in a row, and we're even breaking out 2 highs on this Sunday. So this is one of those things that highlights, like, people will ask my view, and it's like, there's no point in knowing my view because my view is going to change and you're not going to know about it, right? Like, look what has changed in 1 week. We went from 110,000 to testing highs, largely in my view due to some of the fears about the government shutdown. The fears about the government shutdown pretty much highlight some of the inefficacy of our political system. And of course, when things run out of money, you need to print more. Printing more money equals inflation equals Bitcoin is a safe haven for that. So I think inevitably you need to be watching Bitcoin. I do think this breakout is interesting. And now, like, this wasn't quite enough consolidation for me, so I wasn't interested in this, right? This wasn't quite enough. Now that we've based for a whole extra month, I do think you need to be more open-minded to this potentially gathering legs. The only thing that makes this a little tough is I think if you know politics, you know that inevitably at some point this government shutdown will be resolved. When that, essentially inevitably when that government shutdown does get resolved, will this then kind of get rugged a little bit by the buyers kind of buying into this? It's really hard to say, and you got to kind of tell it day by day and see how resilient it is. But inevitably, this is something I'm really open-minded to running. I wish this was a little bit more strong here. So on a pure technical basis, I don't love the fact. Let me switch cursors. Uh-oh. We're good. I thought I would have had to relaunch that. So, okay, there we go. On a pure technical basis, like, this did kind of double bottom here, but as far as really exhibiting strength, I would have loved for this to show more strength here. I much prefer stuff that's kind of really tight into that breakout, but nevertheless still open to this. And Ethereum is pretty much going to be the same bag. I mean, the other interesting thing about Ethereum is this Ethereum was able to run a lot cleaner and a lot further. So again, not investing advice, but just my guess. If I had to guess, given Ethereum's ability to really run and cover a ton of distance, and given my kind of thesis that Ethereum is just attracting more of the flows because there's a lot more juice and this Ethereum can really go. It is my belief that if Ethereum breaks out, I do think Ethereum in just absolute percent and magnitude, or well, I guess not magnitude, but in percentage move is probably going to have more juice in it than Bitcoin. So both of them I'm watching. Interestingly, the Bitcoin was closer to highs than this Ethereum. And this rollover was a little bit uglier than what Bitcoin had. But I still think that if this Ethereum gets going, it can really go. So that's Ethereum. So this APP was another one that someone shot out. This APP has been interesting to me. I did one tweet on this during the week. So this stock has run up a lot. I mean, we went from 200 to essentially 750. And a part of this was on the S&P add delete. So I believe 9-8 was the day it was added to the S&P. Or sorry, it was announced to be added to the S&P. Then the actual addition came on this really huge high volume day. And so a lot of people like myself are aware that the indices tend to buy stuff at the top just because all of the people kind of arb that addition, right? So it says we're going to get added on 9-19. So a lot of people and funds and quant funds buy. And then they sell on that print. Massive volume. So sometimes that print does end up the local high for quite some time. And my suspicion is we tried to roll over. Then a lot of people got jammed short into what was a couple upgrades. So then this day was a big upgrade. And this day we really capitulated super hard. Again, the volume, my chart is not having fun right now. Sorry guys, let me try closing some stuff. This is really freezing up on me. 1 second. Part of the dangers of going live. 1 second. Okay. You close the Slack. Technical difficulties. Excuse me. Okay, we should be hopefully back in business. Sorry about that. That's the one thing about doing these live. So this was pretty capitulatory on an upgrade. It was my belief that, oh wow, someone's probably getting rinsed that shorted this on the kind of add delete. So my suspicion is it's very possible this APP has topped. Now here's the thing, right? Like I don't need to be like, my confidence isn't that high, but the thing is you can just trail this with prior bar highs now, like especially now that we broke prior bar lows and we started to crack. This is something where like this has been quite a run. I mean, we've gone from 200 up to 750. In my personal belief, a lot of this move was just on the add delete, then the upgrades to create that tail. So this has been a lot of legs. And so for me, like I wouldn't do, I wouldn't be so interested in seeing, like I definitely don't want to long this at any point unless it really consolidates for a while. And if anything, I'm short biased. Some people are asking, why don't I use TradingView? I find TradingView is good, but I find that there's just a trade-off between the two. I mean, both of them have their pros and cons. I know TradingView is super popular, but I find like the UI a little bit kind of, I don't know, less friendly. I find some of the other features a little bit less robust, but maybe I should give it another try. I am open to switching, but last time I just couldn't quite make the switch. And I find even the app for I mean, the Thinkorswim mobile app, I absolutely love. So yeah, I mean, I'll think about it. So that's my APP take. Let's see. So another ticker that's been really interesting is this NBIS. Of course, this is part of the cloud move. And so this is one of those things, man, it's hard to believe how far this has gone. Holy crap. Man, I remember when this was chilling at 25 this year. Wow. So even with this NBIS, you know, like when this consolidates here, a lot of these gaps have been on news, which is what's made it so tough to kind of find an entry, I guess. But at this point, this stock has made a lot of legs. And especially this, I mean, this was a huge announcement. This was on one of those big cloud contracts. We're continuing to go and get new deals. So for me, this is one of those tickers where it's like, if you're long, you can trail this Qualamagi style. And that's fine. Maybe you give this to the moving average or something. But for me, it's just gotten too many legs at this point without a really good consolidation. So this NBIS, like the type of consolidation I want to see is something like multi-month, like this, especially after so many legs, right? So one of my theories is the more legs you do, without proper consolidation, the more likely you are to reverse. Not only is it that the more likely you are to reverse, but then the magnitude of that reversal is more likely to be greater. So when this has kind of gone one leg, consolidate, second leg, consolidate, third leg, consolidate, fourth leg, like barely consolidate, and now we're almost on like a fifth leg. Like the way I look at this is these legs have gotten bigger and the consolidations have gotten less. So this is a super important point. Like anyone that follows some of my kind of more detailed analysis like this, so it was like nice consolidation, leg, nice consolidation, leg, less consolidation now bigger leg on that news, even less consolidation, also pretty big leg, even less consolidation. So this is actually very common in a lot of the charts we're seeing right now. What ends up happening is these stocks are making more aggressive, sharper, faster moves despite having less consolidation, aka price acceptance. So what ends up happening is people that bought in here, they're now up almost 100% in a matter of a month, and there's not been a lot of time for people to kind of get their sales and for people to anchor to that new price. So for so many people, right, if you look at, like I always think of the psychology of the holders, right? A lot of people over the course of this year, if you asked what's the average price of this year, I would say it's probably like $35 to $40. Now we're multiples higher, and that's all come super sudden. So what ends up happening is without proper price consolidation, people psychologically are more anchored to this range or that range rather than up here. So that's where it's like, you know, I would not be willing to chase a long up here. Like pretty much a lot of the charts we're going to type up today feel very late stage to me. Not that they're going to necessarily collapse. Like I wouldn't think this NBIS is going to collapse. It's not that it's so overextended. In fact, I would argue it's not overextended at all, but it just also hasn't had a lot of consolidation. So even if we take this Robinhood is kind of this similar theme. Like man, oh man, I mean, a year ago, we were at $10. We've literally gone up 10x in a year, and it's not even a small company, which is also funny too. But even earlier this year, we were at 40, 50 bucks. So we've pretty much 3x'd even from earlier this year. And what you really start to see too is that these moves are starting to get more and more sharp. Sorry, I'm getting a little frozen again. So if you look at these legs, like this was all reasonable. This is a slow, steady grind. And now, despite us already being up 2, 3x, this is where we're having the sharpest leg we've ever had, right? And look at the volume. I mean, this volume was the highest. I mean, that was also on that add delete, but like we're starting to do a lot of volume up here, and this final leg is starting to really, really accelerate. So, I mean, here's the thing, like this came on news about some of the forecasting. I believe this was a forecast announcement for some of the betting markets. Like, I don't mind buying this, but at the same time, I need to recognize this wasn't a ton of consolidation, right? Like we're kind of grinding higher, just a couple bars of consolidation. Then, like, let's put it this way. If this wasn't on news, there's no way I would have bought this. So last time we spent a lot of the session talking about how I view everything as a rubric, right? And a scale of 100 theoretically. This consolidation to me is shitty. This distance-wise has covered a lot of distance over this year. The only thing that tips this into the category of, oh wow, you know, I might really want to consider buying this, it's a news catalyst. In fact, one of the videos I have coming up in I think the next week even, or next 2 weeks, is how most of retail greatly underestimates the importance of news as a variable. So please, if you are interested in that content, hit the subscribe button. I'm here on a Sunday morning reviewing. If you're enjoying this, if you find value, please hit subscribe, because that's why I'm doing these, to help boost the following and get my message out to the people. And so that news as a variable is a really big deal. So it goes from, hey, I don't want to absolutely at all consider this as a long, to, hey, news means this could really trend. Many people know that one of my default stops for a trending stock is just using prior bar lows. So I think it's totally reasonable to do this as a buy above 130, to then structure it to the lows of the bar initially, and then trail it using prior bar lows. If you want to do a looser stop, you can give it, I use Bollinger Bands, so this is the 20-day moving average. So you can give it to the 20-day moving average to be a little bit looser stop. If you want to be more Qualamaggi style, you can give some to the 10-period moving average when he does a sharper, steadier move. So all of those are really good options. And so now a lot of people always ask, like, how do you know what stop to use? The best thing you can do is just collect data. All you need to do is find, 20, 30, 40, 50 tickers, however many you can, and just test it. Like, okay, what happens when I give it to prior bar lows? What happens when I give it to a 10-period simple moving average? What happens if I give it to a 10 EMA, a 20 SMA, and a 20 EMA? What happens in a raging bull market if you just said YOLO, I'm not selling for a really long time unless it goes back below 130? Those are all things you can backtest and crunch data on. And backtesting is more accessible than ever with AI and a lot of the programs out there. So Robinhood's one of those things where it's like, had this not been on news, I have no interest in this because we've only accelerated, right? I want to find, like, the best opportunities are like around here, right? When we're breaking to highs. Like, this is, like, if you asked me on this chart, what's the true entry? The true entry is back here. And maybe you then trail it using a moving average. Maybe you get stopped out here. That's great. You need to recognize, though, we're talking like late stage plays here. Really, really late stage plays. You want to know some charts that blew my mind that some of the course users brought up? These memory stocks, like, oh my God. Like, I could not believe some of the moves these memory stocks made. I mean, you want to talk about a breakout to Evernote? So for people that are new, a lot of what I do and did to learn trading was you take an Evernote or Notion and you start to build these categories, especially based on the type of market we're in. Right now, we are in a very bullish, strong market that is rewarding swing momentum. Swing momentum is the place to be right now. So if you look at this stock, SNDK, which is a memory stock, I think we all know SanDisk, right? We had a news gap up. we broke above $60 after pretty much consolidating the whole year. Then look what happens. So I mentioned a couple possible stops. Look how well this held prior bar lows. Like that is an insane, insane hold. I don't think you get stopped out till all the way there. So now think about what a simple system this is. You could have bought 60. You could have risked to the low of the bar. So call it like $5. You could have risked $5. This ended up going to $103 essentially. So I've tweeted and talked about this last time on how the context of the market is what really can really affect your expected value. Because people hear the pros talk about how does the context of the market affect expected value. This is not normal. You should not normally risk $5 on a swing long, especially on the daily time frame, and it just literally holds prior bar lows for like 15 days, and you end up making over $40. That is very, very rare. The reason why that is happening is because this market is so strong and momentous right now. And so what that means is your reward was way higher than the risk in this market, and your probability. Like when we look at some of these charts, so many of these stocks work. Like when Hood, which isn't even that great of a setup, Hood's not that great. It breaks 130, it goes. When we look at stuff like the Oklo, it goes. Even we're going to touch on these these quantums. We were holding that counter trend. Like, I mean, it's so funny how spot on, like, and I'm not going to be one of those people that cherry picks their wins or anything. So one warning, so many people online, they'll be like, oh, you know, we hope you all banked. We crushed it in our Discord room. And like, it's all cherry picked, right? So many of those Discord chat rooms, they just cherry pick their wins. And I'm not going to do that, right? Because guess what? For everything I say well, I'm sure there's things that I don't say well. And a lot is how you actually trade it. Just because you say, oh, wow, you know, this is a counter trend and we're holding prior bar highs, you know, if that breaks, I'm open to whatever. It still comes down to how it unfolds, how the individual trades it. Like, it's not that simple. People think just because their idea is right, it was simple to trade. It's like, no, dude, that's just not how it works. But this did hold that counter trend. This did then break, you know, this was holding prior bar highs the whole move. We break prior bar highs, finding support at the moving average. Now we have that counter trend. So that's like the most important thing you can take away from these streams is how I think about price action and how I see these legs, right? Like super beautiful stock, really strong bar, consolidation. I mean, amazing. One of the best consolidations of the year, break 50. We hold prior bar lows the whole time. Counter trend comes in. We hold prior bar highs the whole time. Counter, you know, we break the counter trend back to the original trend higher. We're holding prior bar lows again, and we found support at the moving average. So now this is so important. Like, why is it that this stock traded so cleanly, right? This stock is the perfect picture perfect example of a broken slot machine. It's trading so cleanly because we're moving on catalysts, we're moving on high volume, and because this stock is setting up in a way that is not beta with the market. Like this is the definition of finding excess edge by moving into stocks. And this is why I would say Forex to some degree is mostly bullshit. Futures to some degree are mostly bullshit. I want you to find me a setup in futures or Forex that is this fucking clean. Like you can buy $50 and literally make 50% in a week and a half. Where does that happen in futures and Forex? Like where, like, you know, please show me setups like this OKLO in futures and Forex. Show me a future that trades like this, you know? Show me a future that trades like that. Show me a future that trades like Tesla. Show me a future that trades like this SanDisk. What future has consolidated for a year, broken out, and then it holds prior bar lows and makes almost like a 70, 80% move? Like futures do not move like this. And all the time, I get people that reach out and they say, I'm struggling. And you want to know what they say they trade when they're struggling? They trade Forex. You want to know what they say when they trade when they're struggling? They trade futures. And here's my personal belief. It's not that you can't beat futures, but again, where are you getting moves like this? Someone please show me the chart where you can get an epic move like this. The other thing that I'm really curious about is in the next Market Wizards book, how many of those traders will be funded traders, sim traders, or how many of those in general will be futures forex traders? All of the best moves and the best traders and the best compounding I've seen, the absolute best compounding is getting done in stocks and in markets like this. There will be markets where futures are in play, but you're not getting anything like this right now. And like, look, guess what? People are saying platinum. Look, like, okay, this went up 2 days in a row. This went up 2 days in a row, broke prior bar lows, and then, you know, essentially stops you out. Or like, even if you are holding for a moving average, okay, it's moved 10%. You know, that's not the same. That is not the same as IonQ. That is not the same as Oklo. You know, is this a really good setup? Yes. But like, if I had to play one, I'm rather taking those stocks. People are saying gold. I discussed gold last time. I've traded this gold breakout. This gold breakout was definitely one of the better setups of the year. But again, look, if I'm using prior bar lows, I get stopped out 2 days. You know, this is one of those setups where this was so good, you want to give it a looser stop. But this is not, like, this stuff isn't having the range that you get in stocks. You know, like, don't get me wrong, this is a beautiful move. You can catch a really easy 10%. But again, you know, let's go back to IonQ. You're catching 10% literally on day one. On day one, you're catching 10%. Within a week and a half, you are making 50%. And here's the thing. People are going to say that, oh, futures are levered. Leverage does not change the expected value. Like, that's such an important point I need to make. Leverage does not change expected value. The expected value math stays the same. Leverage allows you to bet more on the same expected value. In other words, if my expected value of the trade is I'm going to make 7%, I can bet way, way, way more on that aggregate return of 7% over the long run. But that does not improve the expected value. So Miguel in the comments is saying options are a good way to trade gold. So options are a great way to trade gold, right? And so options and how you structure the trade does change the expected value. So let me repeat. Using leverage does not change your expected value. Using leverage allows you to bet more on the same expected value. My argument is that stocks offer some of the highest expected value out in markets, bar none. Infinitely higher than futures, and futures even better than Forex. If you understand just math and betting optimization, the number one rule of trading is you always want to be an expected value maximalist, pretty much, with some nuances on variance and everything else. In general, the essence of trading is I want to find the highest expected value opportunities, then I want to bet on those highest expected value opportunities according to liquidity and my own personal risk tolerances. So now, how you structure a trade via different products, like using options, you know, I did use options on futures for this gold breakout. So options do give you a different expected value and a different skew. So Miguel, like, great point. And I will even use options in equities and stuff. So all of that is really, really, really important to emphasize. Yes, there are good opportunities in futures. That platinum chart, I like it. The gold chart, I really, really, really like it. I mean, that gold chart is amazing. Bitcoin and Ethereum futures, amazing. But I would argue the number of opportunities in stocks are at least 10x, 15x, 20x. I would argue the magnitude of the opportunity is bigger. And you also get, you know, options in a lot of this stuff. Yes, you have options on futures, but some of them aren't so great. So that's that rant for now. Let me go back to these. I got sidetracked. So this SanDisk was amazing. So now here's the thing, right? When we talk about consolidation, this made a massive, massive leg. Like, especially for a company like SanDisk, this stock hasn't done anything for fucking 20 years. We have our counter trend of a couple days. We then gap and we go again. So this, to me, the magnitude of this move, this is very late stage at this point. Like, will I consider buying this? This SanDisk is actually a very good analog to the hood chart, right? So one thing I urge you all to do, and part of why these sessions are so good, is you get to do these mental comparisons. The more charts you view, the more you can connect the dots. Like someone like Nate, Investors Underground, Investors Live, is super good at these comparisons. And like, this is how you know real from real. Like anybody that has these databases of charts in their heads, like you've put in the work. Like, you know, I don't need to see broker statements. You've put in the work, right? And so what I do in my head, we just reviewed the hood. This made a really protracted, you know, large leg, mini consolidation for a couple of days, then boom, we break higher. So like this pattern reminds me very much and conceptually is similar to, you know, this bar here. That 130 hood bar is very similar to this 110 break in SanDisk. You know, with a news catalyst, with good volume, I will consider it. But for both of these charts, both hood and SanDisk, you need to understand, like, we are in late stage bull market. I don't know about you all, but if I log on to Twitter, my For You, or not For You feed, I forget which is which. My main feed, despite my hate of politics and just not wanting to consume any political information, it used to be politics. I don't know how, but my feed is now exclusively people posting their year-to-date returns. It doesn't matter if they're an investor. It doesn't matter if they're a trader. It doesn't matter like if they're a YOLOer. Somehow my whole Twitter feed is like even people in the S&P 500 posting and flexing their returns. Like, I promise you, this does not happen at the early stages of a bull market. I'm getting replies to some of my tweets where people are saying, oh my God, you know, the only way for wealth is being invested in the market. That does not happen in the early stages of a bull market, right? Markets do go down, and most people will not even know this, but there are periods of just there's lost decades sometimes in the market, right? The US market has been one of the best markets ever, but there are periods where it literally does nothing, right? In 2001 to probably 2007, like post.com bubble, trading was just absolute ass. It was probably, I would argue, not that I traded then, but it, you know, my friends did, my trainer did. The early 2000s were probably the slowest trading market in the last 25 years. It is impossible to imagine a market that just sits there every day, right? In this market, we have stocks we have large companies, Robinhood's, you know, SanDisk, Tesla, like all these are billion-dollar companies adding multiple billions like it's nothing nowadays. That is not the early stages of a bull market. I mean, so look at Seagate. Seagate's one of the most boring stocks of like the last, oh my God, this is going to be hysterical. You want to see something that speaks to how silly this is? This is Seagate over like, I don't know. So from the start of my career, we were at $35. 5 years later, we were still at $35. 10 years later, we were at $45. Like even this range held for, I don't know, 5 years. We break this. Oh my God, what a chart this is. Holy shit. So this is a really good point to make. Like, you should have limit alerts. You should have like stock price alerts in everything. Like, and what you'll find is when you're trading long enough, you'll have alerts that get triggered from literally years ago, 5 years ago, or 10 years ago. Look at what a crazy weekly chart this is above 120. Like, oh my God, if you had price alerts in from 2021 and 2022, wow. Like I'll be honest, I have not, until recently, I had not typed up Seagate in ages. But when you look back, what an insane weekly chart this is. Oh my God. So for the really long-term swing traders, if you do a Qualamaggy style, again, there's nothing special about what Qualamaggy does. There's nothing special about any time frame. There's nothing special about any particular moving average. I just use the 20-day. Imagine swing trading this and buying that breakout and giving it to the moving average. Like, my God, is that an epic breakout? You know, similarly, STX was running way before this WDC, but even imagine catching this then. Man, I know people are shouting MU. This MU, like, I don't really like Micron that much. This Micron is a far shittier, messy. I mean, this is an ugly chart. You know, for this to go for 150 back here, then of that breakdown, like my eagerness to buy this is way, way worse than in STX. Like STX as a chart is 100x better than Micron. And STX is better than this WDC, even though this WDC, oh my God. Holy shit. I'm probably going to end up saying this a lot today and on these streams. This is not the chart you see at the early stages of a bull market. Like this is some late stage bull market shit. Man. God. So here's the thing. Like even if you look at this WDC, like, okay, this is a beautiful consolidation. We start to hold the moving average. That's great. We break out great. But now we've accelerated so much. Like I'm not interested in like, that's the commonality. Like if I had to impart one theme to you all today, like a lot of these charts, in my opinion, are entering late stages, even versus a week ago. Like so much has changed even versus 1 week ago, right? Like this WDC has gone up 20% in 1 week. This Robinhood has gone up over, you know, like 10% in 1 week. A lot of this is not great. Like I'm taking mental note of that, right? Like so here's the thing. What does it mean when I say we're entering the late innings? Like if you own a stock that is blowing off to the upside, I want to be way more eager to sell that. It's not that these things will necessarily collapse. Like I'm not saying Robinhood is going to $50. I'm not saying, you know, STX is going back to 120. But what I am saying is like the odds of like this needing to either like three things can happen, right? I mean, this is actually an important breakdown too. So time out. At any given moment in time, a stock can continue to trend higher. We can consolidate or we can pull back. That's the main three ways a stock can move, right? I mean, just that's not even a Lance belief. That's just like a fact, right? A stock can either trend higher, a stock can either consolidate and be in a range, or we can be in a downtrend. At any given moment in time, I am trying to handicap what the odds of each of these are. When we consolidate to the moving average and start to break out, at this moment in time, the odds that STX continues higher is at least 50%. I feel that it's maybe 65% higher, maybe 30%, maybe 20% consolidate, maybe 15%, 25, I forget the math already, that we go down. In something like IonQ, when we break 50, the percent that we go meaningfully higher is really high, really high. And so these chart setups, in my mind, I'm trying to gauge a rough estimate of how, like what that distribution is. What are the odds we go higher? What are the odds I take some small loss? What are the odds we pull back, you know, decently? And so, especially on this last leg, the odds that STX continues at this rate, it's starting, like you're starting to, in my view, right? This can change literally by the day. In my view, the odds of this continuing at this rate, it's decreasing. The odds of us getting a pullback are increasing. The odds of us consolidating, like at this point, consolidation for Hood, for STX, for SanDisk, oh my God, like the SanDisk chart is disgusting. The odds of these consolidating, that's now my base case. In fact, I would argue that's my base case, and it's also more likely that we go down than we go up at this point until we consolidate. So all of that, I'm doing that assessment. And how many charts have we typed up today that look scary like this? Like this equals good setup. This equals way too sharp, multiple legs, no consolidation. Okay, back to now the quantums that were on my list. We discussed these. I mean, look, perfect trend, perfect counter trend. We're continuing the big picture trend. We're surfing the moving average. I mean, this is just a beautiful stock to watch. QUBT, this is one of the shittier stocks. Like this isn't my favorite. I mean, look how shitty this price action was compared to I on Q. So I'm infinitely more scared to play this stock than an I on Q. That being said, if I want to swing this, we held the moving average, even though this price action is rangy and shitty. We then break above 24. So, okay, you can buy this break of 24 and give it to lows here. Personally, I find Qubit to be one of the shittiest of these stocks, so I don't touch Qubit. I tend to be more selective than most. I'm not touching Qubit long. No interest in that. You then have QBTS. So, okay, this is so important. Like, look how good this QBTS consolidation was. This breaks out. We don't pull back. We then break out again. Notice how better the QBTS chart is than the Qubit. This had a mega blow off. We pull back super deep. We're super rangy in here. This breaks out, and this is rangy and pulls back hard. Like, I mean, that's the benefit of the Quala Maggie streams, is you learn all these nuances, and that's even the benefit of why I'm doing this, right? This chart equals shitty. This chart equals infinitely better. Like, that's why you want to spend these Sundays learning these charts. Like QBTS, thumbs up. QUBT, thumbs down. That doesn't mean that QBTS is going to work. That doesn't mean that QUBT won't work. But if I had to bet, which is literally what trading is, I would rather bet long on QBTS than QUBT. RGTI, I mean, equally as amazing. I mean, this didn't have as crazy as a blow off. This consolidation was really nice. We break these ranges, we break out. This is amazing. Notice, that is why this stock has broken out further and is still going. And so again, like even, man, these comparisons are so important, right? So important. This, like, okay, QUBT, let me zoom in a bit. QUBT had the shittiest continuation. This even, I think, had that offering, I think it was this day. We then pull back and like, this is rangy bullshit. This chart sucks. Okay, maybe this goes. I don't want to play this. This chart sucks. QUBT sucks. I on Q, amazing. Super clean, setup we were talking about. It broke out super clean. That is not coincidence. The counter trend, super clean. This now continuation of the trend, super clean. This had a steep pullback though, versus something like RGTI. RGTI was barely able to pull back. Again, look at this. So I've got, okay, this is important. One of the next videos that's coming out in a couple weeks, it's on how I think about Fibonacci retracements. Plot twist, spoiler, Fibonacci retracements are total bullshit. What I do instead is I look at percent of retracement. So this QUBT retraced 100%, literally 100% retracement. I on Q, this was like still above a 50% retracement. That equals good. RGTI, barely able to retrace. It is not a surprise that this then is the most relatively strong. We break out and we continue. That is not a coincidence. That is not a coincidence at all. These are the nuances you need to be picking up from these sessions. These are why these sessions are so important, right? Like, it's so important to you could spend okay, here's your homework assignment actually. Your homework assignment is to do two little projects. Compare the charts over the last, I don't know, this was since what? It's only been a year. My God, it's been a year. Study the charts of RGTI in very high detail. Which ones pulled back the most? Which ones had the most euphoric blow off? Like this RGTI wasn't a crazy blow off. What was a crazy blow off was this Qubit. This Qubit capitulated. Notice we still haven't gone to highs in this, right? If we're looking at all these other ones, RGTI is above those highs. Ion Q is above those highs. This QUBT is not. QBTS is way above those highs. This setup was amazing. It's not a coincidence that this stock is running like that. So do this comparison of those quantums. Do the comparison of the SanDisk to the WDC to the STX to the the Micron, even though I don't quite group Micron as much in those. That is an amazing homework assignment you can do. So those are the quantums. I can't stress enough, like really study those. Literally make it, if I'm going to record for about an hour, make the next hour of your Sunday and just do that homework assignment. It's going to be so valuable to you. Man, even this Micron, that's an amazing breakout there at above 130 when you get the other memory names breaking out. Oh my God. Oh my God. There we go. Wolf. So, I mean, this Wolf is just garbage to me. Like, I like big news, whole blow off mess, like, or this wasn't news. This was the whole, the split corporate action thing. I mean, this is just dead in no man's land. Like, I'll have a price alert at 35. I'll watch this stock, but I have no interest in this. We're just dead in no man's land right now. No interest. Some people said UNH. I mean, UNH, again, this is a stock that's, right? We had the Buffett stake. We're just surfing the moving average. You can't not like that. There's nothing to not like about that. And we're in this gap range. There's nothing to not like. You know, if you're long, you could just trail this against the moving average that we're surfing. Classic Qualamaggi style. So I know I'm talking a lot about moving averages. So it's going to be, if some of you saw the Tory video, so the video I did on trend lines and talking about Tory's trend line system, that's the most highly viewed video I've ever done. Like, I think that got like 50, 60,000 views in literally a couple days. I am doing a similar style Qualamaggi video on moving averages, where I'm going to discuss what moving averages are, EMA versus SMA, why I use them, when I use them, why I think they work, how Qualamaggi uses them, comparing and contrasting how he uses them versus how I use them. If you're interested in that type of video, give me the old subscribe. That video is probably like a month away, but I am super excited for that one because Qualamaggi is goated and just great dude. So UNH, I mean, not that much to say. So, okay, one of the best charts from last week, this USAR. Again, you need price alerts in this stuff. If you have a price alert in at, 1950, you're doing everything right. Playing this breakout, you're doing things right. So that is, I mean, this USAR, amazing setup. UUUU, I'm less interested in. This to me, it's got multiple legs. We need more consolidation. It's not that tight. I might do a couple more tickers before a quick Q&A. God, I mean, this is just like a crazy move too. So one thing I want to make a point. I asked my Discord community, all the members of the course, for tickers. What ticker have I typed up that did not look like this today? What ticker isn't from the bottom left to the top right? Okay, yeah, Chipotle, someone just wrote, and that looks like shit. But, of the tickers submitted to me, every single ticker is bullish. Like, we are in an insanely strong bull market. The thing you want to do in an insanely strong bull market is you want to play long. The biggest opportunities of this year were all longs. Even if you want to talk gold, even if you want to talk IonQ, even if you want to talk Tesla, all of these were really good. So now here's the thing I want to point out. We are starting to see some cracks. This Tesla got sold off on their delivery numbers. This Palantir got sold off hard on Friday. I will be paying attention to some of the really big winners and the leaders. I will be paying attention. Oh, I don't know if I ended up discussing NVIDIA. I mean, so again, this had news. We spoke about it last week. This could have broken out. We didn't. This breakout so far, we've gone nowhere. Like, this is kind of a sign. Like, look, I'm not saying NVIDIA won't go, but it's kind of interesting to me that NVIDIA in other markets, this could really be ripping. NVIDIA should be at $200 right now. That's not to say it won't. Anything could happen, but I'm still observing that. I'm observing Palantir start to falter. I'm observing Tesla. Here's the thing. Like, God, we didn't quite break out yet, like, you do need to be a little bit scared. Could this have been just that lower high against this, and we kind of double top? I'm not saying that will happen. In fact, I kind of suspect like it won't, just because momentum is so strong and there's so much money right now. But I am paying attention to like a couple cracks. So now roughly 10 minutes left. I'm gonna try and go to some questions. If you've been throwing stuff in the chat, I've had zero ability to follow the chat because there's just so many messages, and I'm just talking the whole time. So let me do 10 minutes of Q&A based on some of that. I mean, we're talking about SPY right now. There's literally no reason to be bearish on the SPY. Like if there's a bearish argument, I mean, I don't see it. We're just surfing the moving average. It's a slow grind. Like the slope. So I've done videos as part of the course that talk about like how important slope and rate of change is. This slope is literally, it's just a slope of 1. Like this is as steady as you can get. Yeah, we've gone a lot of distance. Like I'm not particularly bearish. The trend is just higher. Okay. So the other thing I would say, and I said this last week on stream, one of the best things you can do is just go back to 2021. Go back to 2021 and look at some of the breakouts and look how 2021 ended. Some stuff blew out and capitulated. I've not really seen anything capitulate yet. Right now, trend is still higher. I mean, I'll even touch base on open, the meme stock of this bull market. We could have definitely rolled over and died. We haven't so far, but I am still watching like this. Like, again, I'm setting price alerts. I want to know $11 and $7. That to me is going to be a tell. I want to note, can Palantir break 190? I want to note what happens to this NVIDIA breakout. So I'm paying attention to all of these things. What other questions can I touch on? Do I use volume profiles or channels? I mean, not really. I pay attention to volume, but I'm not doing... A lot of it is just really looking at all these nuances of the chart. I've got my Bollinger Bands. I've got my volume. I'm not doing anything too crazy. I mean, SMR to me, this is just in total no man's land. So this OKLO continues to be in no man's land, but I will have alerts. I will be watching this. We're still holding the moving average. This easily could have failed. We didn't. We've so far resolved higher. Will I be interviewing Qualamagi? No, I will not. Qualamagi is busy with life and has a lot of cool things on his own going around. So this was one common comment last week. Can I talk about intraday trading entries and exits and stuff? So anything I'm talking about chart-wise on a daily chart, when I talk about what a good entry or a good consolidation looks like, when I talk about this I on Q at 50, these concepts apply perfectly to a intraday chart. The reason why I'm not showing an intraday chart is because I don't have the intraday chart for Monday, right? Like I'm gonna base any intraday charts and price action off these same concepts. Like, oh, I wanna see a nice setup like this. But the issue is I need an intraday chart and I don't know what Monday is gonna hold, right? So am I more swing than scalper? So I used to be pretty much, I used to trade 4 million shares a day or more. I was doing millions and millions of shares per day, in and out, scalping, big picture stuff, breaking news, imbalances, every order flow inefficiencies. I mean, I was doing probably 10 different playbooks a day for millions and millions of shares per day. Now, I don't want to sit in front of the screens all day. Pretty much all I'll do nowadays is I sell options premium or I go for really big trades. I will do some of these big breakouts. And the funny part too is these breakouts, I wouldn't even say are one of my biggest strengths. Like I'm learning with you all. I mean, people like Qualamagi and some of those swing traders, I've highlighted them in a Twitter post. I think 2 Fridays ago, I highlighted some of the amazing swing traders on Twitter. Like I'm learning from them as well. What I did at Trillium was mostly intraday. So I've been trying to really expand into these other areas. So just because in these bull markets, like, oh my God, the compounding of wealth you can do, especially while not being as glued to the screens, is really incredible. So the other thing I would impress and impart upon you, the most important thing you can do is you need to figure out, like, you need to always take one step back and ask yourself, what is the easiest money in the market right now? The easiest money in the market is playing these big picture swings, these long momentum, awesome breakout swings. Like this is gonna be, when I look back and do my annual review for 2025, this is gonna be one of the setups I talk about. that's going to be one of the setups I talk about. Tesla is going to be one of the setups I talk about. All of those are really, really special charts, and that's where the easy money and the biggest money has been this year. Again, because the markets are just going so crazy, it's not normal to buy a $60 breakout and make 40 points. So you want to always be intellectually and conceptually aware of where the best money is. And then you want to study it. And so here's the thing. If this wasn't in your playbook, what that means is you want to learn for next time. That's totally okay. I'll be honest. In 2021, these swing longs were not in my playbook. I learned from 2021 since then. I've studied other swing traders. I've adapted my system to swing trading. And that's what I've done over the last couple years really well. And so now here's the thing. This market is a raging bull market. There's markets where things will get even, stocks will get euphoric. And I'll do my mean reversion playbook on this time frame. SMCI was one of the best mean reversions maybe ever, honestly. MSTR was another amazing mean reversion. Notice what an epic capitulation that was, and we can't even come close now. So let's see. So the final question I'm going to take before a very soft sales pitch, what would convince me that it's the beginning of the end for this bull run? So it's like I was kind of saying, I'm going to be keeping an eye on Palantir. I'm going to be keeping an eye on major tech leaders like NVIDIA. I'm going to be keeping an eye on how we start reacting to, so AI has been driving this market, right? I think, cloud computing, AI, data centers, nuclear, that's what's driving this market. I want to be aware of there being a thesis busting headline. Earlier this year, we got a lot of thesis busting headlines. All of the top ops from earlier this year, I have archived as part of the course. Multiple times, I talk about all these headlines and why that's so important. So now, what could end this bull market? The fact that for some reason, this demand, we might be doing too much capacity. We might be too much planning. And all of a sudden, here's the thing. If you take something like this NBIS or this Oracle, this is actually an interesting sign. If you want to talk about one minor red flag, this Oracle had this mega gap up on that OpenAI contract. They announced it, but then we found out it was just OpenAI for the bulk of it. And this has started to kind of fade since. I think if people start to realize, I'm sure you've all seen those funny memes where it's like, NVIDIA, Oracle, OpenAI all jerking each other off in this just Microsoft. It's the meme of them all jerking each other off in this circular, they're just one pocket to the other, one pocket to the other. As much as that's a hysterical meme and makes me LOL and share it in all the group chats, I do think people are going to get scared of that and include Meta in there as well. This Meta is rolling over, right? So are people starting to get skeptical of these massive cloud contracts? Are people starting to say, oh my God, it is just a massive circle jerk of taking GPUs and just sharing them and leasing them. And it's like, all this is going to depreciate anyways. So in a raging bull market, people don't say what if. They in a raging bull market, people say why not rather than, oh no, I should be skeptical. If people start to be skeptical of some of these cloud contracts and the massive circle jerk around the cloud stocks, that's starting to be a red flag that can end the bull market. If we get a lot of stuff that blow off, like the quantum, I'll be honest, quantum from a fundamental value standpoint is pretty much total bullshit. There's no way to handicap when quantum computing will exist, what the cash flows will be, let alone if these piece of shit companies are actually going to be the ones that do it. You only get these trading at 10, 20, $30 billion market caps in late stage bull markets. So if these blow off, if stuff like NBIS starts to capitulate or roll over, if all of these start to roll over, Palantir starts to roll over, that's when I'll start to question it. Generally, in a raging bull market, the most inflated stocks are the ones that fade the quickest. So those are some of the red flags I'm going to be looking for. So now, my friends, I have spent an hour of my Sunday with you all. I enjoy this hour. This is an hour of review I'm going to do anyway. So I said, why not make it public? But if you found value in this, please return the favor in a couple of very small ways. If you want, please subscribe to the YouTube channel. We are dropping a lot of bangers like the Qualimaggi moving average assessment, like why breaking news is such an essential variable, like how I use retracements rather than Fibonacci's and why Fibonacci's are bullshit. I promise you, these are good videos. I take a lot of time to write them, script them, and make them fun and entertaining with a ton of jokes. The easiest thing you can do is subscribe on all my socials, Instagram, Twitter, YouTube. The next thing you can do, I have an amazing monthly newsletter where I try and drop the best amount of knowledge in one monthly email. It is my 5x1 newsletter. It is at theonelanceb.com. If you are a mega fan, I promise you the same insights you're getting from these sessions I have as part of my course. I am taking tickers exclusively from my course so that I can give the most value to them. One other surprise thing, I will tease this. I am debating the idea of doing a signed copy of Market Wizards for every member of the course or every loyal follower, and I'll still do signed copies if I ever run into you or at a meetup or at Traders for a Cause. So that is going to be super cool and exciting. So those are the ways you can return the favor if you found this valuable. I had a wonderful time spending my Sunday morning. I hope you all do a little bit of work, do those 2 homework assignments I gave you, rest up, amazing market, work hard, but then guess what? You know, life is more than just trading. Make sure you relax and recharge on the weekends too. I promise, even though I push you to work hard, balance is good. I do the same. The rest of my Sunday will be watching some football, eating some garbage, and maybe still making it to the gym. So thank you for all the support. I will keep on doing these as long as people keep on attending and enjoying and giving me the positive feedback. So thank you, my friends. Trade well, you know, and again, use these as a tool to learn, not to piggyback. I just want to teach you how I think, and this is an insight. So hope you found it valuable. Goodbye, my friends.